All right, welcome to this week's edition of Futures Friday. Who crushed the crude oil today? Any fantastic trades? Certainly a slow sideways type of market. Chris says, me. What'd you do, Chris? What was the trade? Exactly. Andreas knows the winning formula. So I thought that this 70s area was going to be really important. Turns out it was not. I mean, it is and it isn't. I think it is important. It is a good reference. But as you can see today, just about, in fact, every single 30-minute period, except for this most recent break lower here just now in J period, was both above and below the level. That's not exactly what you want to see for your key line in the sand. You don't want to see it above and below so much. I mean, if you look at a volume profile for the session for today, so here it is. You'll actually see right there at 70. I mean, that is the most traded price for the session. So you can still see the level's been respected several times, but then also just too much time spent around there. So it's not the cleanest line in the sand. It's not about how, we'd like to see it most days, but that doesn't mean it wasn't tradable. So when we kind of take a look at, let's just put this level here, I liked getting involved in this area here. I also continued to get involved and kind of campaign around a position starting here, a little bit through here. And then I was looking for those 90-cent area as we were talking about. And I mean, it was just so pitiful. And there was so much order flow that came in and started to sharply reverse this off this area. Something definitely changed around there. The buyers really tried to get something accomplished. And the bottom line is it's a very, very, as you can see, balanced and rotational market today. Although I would say something appears to be different about this move that's playing out here. So we'll see if we get any continuation or ability to kind of hold beyond, let's call it this general balance that we've created for the session today. If we see, as you can see, other times we just zip back into that on both the upper and lower sides, as is, that's the tactics you want to apply if you can identify a rotational day, playing from the outside in, as we call it, and that just refers to the outside of the profile back towards the mean. But anyways, Toby has a long question here. Let's see. Can you talk a bit about how to develop skill at assessing conditions in order to determine whether you should be targeting scalps, normal size moves, larger than normal moves? What are the best factors to monitor in order to develop those expectations? What to watch for in real time? To note that you might want to rein in or extend your, geez, Toby, you're killing me. That you might want to rein in or extend your existing target in an opening trade. I presently look at RVOL, the pace of the market on my 1,000 volume chart. It's a bit more of a feel thing. I'd like to develop something more objective. Um, the first thing I'll say is kind of towards the tail end there. You talk about feel and you want to get more objective. In my mind, feel or intuition or conviction or any of the other number of terms that traders use to talk about things in that way, it doesn't mean that you're not objective in your feel or your intuition. It simply means that you consciously don't know yet what it is that your subconscious pattern recognition or whatever is driving that feel, let's call it like you called it, you just haven't connected to that on a conscious level yet. You haven't identified consciously what the pattern is that you're recognizing. There we go, break into a fresh low in crude. So I like to make that point whenever we start to talk about feel or intuition or even conviction. It's important to know that there is something there. Granted, if you're able to do anything worth a crap, then there is something there. You just need to identify, you need to connect with it. So anyways, so back to the main question. I'm going to call this questions. There's multiple questions here. So developing skill assessing conditions in order to determine whether you want to play for scalps or you want to play for bigger moves. Well, that's, to me, that's market profile. More times than not, it's market profile. On a day like today, where we were talking about this earlier, you have crude that closed here and opened here, and then you have crude that closed here and opened here the following day. Okay, I mean that's quite a sequence of gaps there. That's quite a sequence, as I was kind of alluding to this morning. When you open so detached from where the market's been or what's been going on, a lot of times where that move went to will make sense. This is simply a market reverting back into a prior area of established balance. Okay, that's a very, very common type of move. In the case of the gap down, I know you and I were having some conversations today in the market profile room. That would have been a clear destination, and that would have been kind of some concern about what opportunities were left on the table and things like that. This I didn't feel as that way about when we gapped back up. I didn't see that as any kind of clear destination. Yeah, we had this 70 level here, but it's certainly not the A+ of A+ levels. As we see, something was indeed different with crude oil here as we monitor this live. We are getting a quality down move here. So I can tell you that I got out just in the nick of time. In fact, if you were to look at my footprint chart with some executions on it, there you go. You can see all those exits right there just before we get into this slide. Let's see here. So market profile, other than some of the situations which there's a large gap and we're just opening up so far detached, we have some other tools that we like to bring in and use there. And that's just beyond the scope of this webinar today. But for the most part, 8 times out of 10, the skills you learn in the market profile course, that's going to be great for you determining what type of risk reward is on the table. Where are some potential destinations that the market is headed towards? What are the key lines in the sand in which that current condition, we talk about trading, what is, where is a line in the sand in which that would change and the condition would change? Therefore, the risk reward is different. Therefore, our up or down bias is different. Therefore, we look to trade the new what is. We never predict which of those is going to play out, but we do go with current conditions with one law of market dynamics in the course where we actually anticipate a change in condition. But other than that, we always go with it. So that's your best bet. There are some other intangibles, such as, are we very, very quiet with below average volume? Well, we're going to be less likely to have some big moves. So this kind of comes into the second part of your question. What are the best factors to monitor in real time to maybe you want to rein in or extend a target or things like that? We don't want to do a ton of that, but we certainly are able to monitor some of those factors, such as relative volume, which you said that you looked at, the pace of the market, quote, on your 1000 volume chart. I do the same thing. That's certainly more along the lines of that feel type stuff, but I firmly believe it could be quantified. You could look at how many ticks per unit of time are coming across the tape, and places like Jigsaw have done exactly that. They have a little meter that shows kind of the speed of things. That's tough. I think that's tough to put into a single tool that works for everybody, because everybody may have a different perspective as to, for example, over what period of time am I monitoring that speed of tape? Is it over the past 5 seconds? Is that what matters? Is it over the past 5 minutes? Is that what matters? So you've got to kind of quantify some of that and think about what you're looking for. So certainly speed of tape and relative volume, as you mentioned, are massive things. But a lot of times it's kind of this catch-22 where you really do want to stick mostly with that big risk reward as we approach our full Globex session VWAP here, right here into this low tick. Just tagged it. You do want to monitor those things, but you also never want to get too fixated on the short-term stuff. You really do want to maintain the big picture perspective, all the quality pre-market work that's done in order to determine that risk-reward landscape, most likely scenarios, as in current conditions and where they change. All that stuff is just massively important for setting expectations. For me, order flow, which you didn't mention, is just the elephant in the room here. Order flow, determining how aggressive buyers or sellers are being moment to moment over the course of the day, bar to bar, in multiple time frames of order flow, if you will. I teach my guys about what we call short-term order flow, and then what we call contextual order flow. Which is just essentially different time frames for monitoring that. If I'm in a position and all of a sudden I identify a real weakness on one side of the tape, I will do, as you said, as we get this bounce off of VWAP here, I will do as you said and rein in some targets perhaps. Perhaps I had a general expectation of scaling out of a trade for, let's say, 17 cents in crude oil, looking to get a nice rotation. And all of a sudden, it just becomes an absolute grind. Obviously, the momentum in price isn't there. The buyers are not being very, very aggressive. Or perhaps we identify something else with order flow, such as absorption occurring of those buyers. Those are going to be red flags for me, and I will adjust perhaps some scale outs. I don't tend to do a ton of adjusting core position, overall trade thesis, which is based on market profile and the longer term references. But I don't know. I mean, at the end of the day, you watch you spend, how long have we been together here? Almost 20 minutes, 17 minutes. And you see me talk about how this appears different. This looks like it's actually selling off, and we see the largest move of the day responding. You see me point out the very first thing that I pointed out, which is, hey, VWAP's here, blah, 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 and we see a bounce from there. These are screen time things that have to be built. I didn't necessarily use market profile to tell me, hey, you know, we're selling off here. Although it did help. So let's go back to one thing that I said in the chat. So how should I explain this? We're very rotational in the session, okay? Let's focus on the profile over here. And just up, down, up, down, up, down, up, down. And then one thing that I posted in the chat, so let's check out the chat. Right quick, guys, does anybody know when if I move the mouse slowly, it hangs up right there at the edge of a monitor. But if I move it quickly, it'll zip through. Does anybody know how to disable that? Please reach out to me. I have been messing with that. I've turned off all the auto snapping within Windows, but it's still doing it. Anyways, so here's the last comment by me in the room. Worst case scenario is that we have a nice profile today to begin making some decisions off going forward. I'm sorry, here's the last thing by me. I've been trying to get fills in the 90s, which was that little area right here, for almost 2 hours. HI periods should be a single apostrophe after the S there. Possessive periods, highs, appear vulnerable. So let's recreate this. So these are 30-minute profiles, okay? Split out into individual periods. And all of a sudden, we have something like this. G, and then H looked like this, okay? And my comment around HI highs, oops, had to do with this right here, how they were both at the same level and price was trading up. This was still during I period, so it was in this area. Appear vulnerable. It looks like we should be able to trade up into this area right here, which by the way was 90, which is where I was looking to get those scales. The way that it traded up in there and then dried up, and then there was an order flow sequence. So market profile told me to expect at least to just come up here a little bit. If not, who knows when it would reverse, okay? And then we drop down to the lower time frame where we look at order flow, and that told me, we got up here and then we're getting rejected. Really kind of the volume dried up there, didn't look too good. So that was why you see me actually flatten out as we start to sell off in this area here. Now, what does that leave us with? Well, it left us with the same scenario at the bottom, we call micro poor lows and whatnot. You can learn all about that in the market profile course at smbfutures.com. But anyways, so the market profile did give us, developing profiles, short-term reference in terms of where we have balance and where we have excess. But beyond that, it's an order flow tool, Toby, that are just an overall read on moment-to-moment order flow that helps rein in expectations or extend expectations. So I thought the tempo and whatnot was picking up as we're firing up this webinar. And so we talked about how there is potential for further downside excursion. And that's what we've gotten here. Nice little reversion into VWAP. Slight buying coming in off there. At least it stabilized it. That was also right at that prior day's low right here. Not prior day, but 2 days ago. All right, so, a lot to unpack there in terms of Toby's question. I certainly didn't even answer all of it. Anyways. Nobody gave me any answers on the edge of monitors thing. Reach out to me on Slack, maybe, for those of you that have any insight. I know there's some computer whizzes on this webinar. All right. Resource for learning order flow. Man, I have a hard time recommending other people for order flow. I think almost everyone else out there that teaches order flow overcomplicates it. There's certainly some good videos from the Market Delta guys if you want to kind of familiarize yourself with a footprint chart from the creators of the footprint chart. I know Trevor made that back in the day. Very cool. But stay tuned. We're going to be coming out with some really cool order flow content ourselves. I got a comment yesterday from a guy who is starting to see the I'm not sure if he said the term genius, but that would be going too far. But the value in the simplistic approach when it comes to order flow that I take. Not too much stuff. Obviously, Jigsaw has some great content in terms of order flow and whatnot as well. They certainly look at open orders and different things like that much more than I prefer to. But you know, everything works, nothing works. You gotta figure that stuff out. Are my setups based off of previous areas of interest, highs, lows, value areas? Or do I take it off developing value areas, initial balances? I get lost here trying to put together a MP playbook. Well, unfortunately, we can't, get into that here in 5 minutes remaining. I will take trades from all those references. And you're right. I think the key word there that you put together is put together. I talk about this in the last webinar I did around one of the key skill sets for traders. You have to be able to rank and distill complex information. So at any point in time, we've always got prior high, prior value area high, prior point of control, prior volume point of control, prior value area low, prior open, prior close, current sessions open, current sessions midpoint, where the VWAP is, where the developing values are, where the prior close is, where the prior low is, last week's high, last week's low. I mean, the list could go on. And your question is correct. What in the world do you do with all that stuff? Do you just trade every time you touch one of those references? Of course not. Of course not. You have to learn a market worldview. Again, one of the key skill sets that I laid out in that webinar. If you haven't seen that webinar, it's posted in our Slack room, so you can pull that up. If anyone has a link to that, they could post in the chat to all panelists and attendees. That would be great. I talk about the necessity of creating a market worldview. And so people think that my market profile course, we've done a terrible job of marketing it. We haven't marketed it at all. But the stuff that I typed on the website to describe it, I don't think it does it justice, really. It's not a course to just learn market profile. Anybody, can figure out for free online what an initial balance is or what the value area is and what it represents. I mean, all that stuff's worthless. You can get that stuff anywhere for free. What our market profile course does is it gives you a framework for understanding the way markets move, the way that you can actually digest objective information and then create most likely scenarios where the market is headed, likely destinations as we call them, if we go below this or that area, then what are the implications there? Whether or not, as Toby was asking about, we can have an expectation for, hey, we should be shorter term here today. There's not much opportunity with the current condition. We'll take more shorter targets and scalps versus, hey, this is a day you do not fight the trend. Every single day has a series of swing highs and swing lows in succession, higher highs and higher lows, lower highs and lower lows. That is worthless information, guys, unless you have a market worldview to place that quote unquote trend inside of. A series of higher highs and higher lows are worthless unless you know the context that they're occurring inside of. And that's what we teach with Market Profile, how to see what's going on, how to truly understand markets on a much, much deeper level. So as Mr. Gibson was asking around all these references and getting lost trying to put together a Market Profile playbook, go through our course, you end up with what we call 10 laws of market dynamics. And that is a framework for understanding how price reacts with various distributions of trade activity. And it's like understanding if you drop a rock off of a cliff, how fast it's going to fall. It's going to accelerate at 9.8 meters per second squared. If you shoot an arrow with a certain amount of force at a 35-degree angle, you can calculate where that arrow's going to end up, barring air resistance or things like that. We're trying to take markets and put it into more of a physics, right? If you study thermodynamics, right? If you study all kinds of engineering or these kind of things, it's putting things into a more tangible, objective realm. And that's what I felt like needed to be done for the world for Market Profile. That there was too much kind of, it seems like based on the shape of this profile, it's only long liquidation and, we've got this or that. So it feels like, it looks to me like this market's due for some kind of a correction here or there. I can't trade that way. I don't know how anyone does, if anyone does successfully. You have to find better ways of really seeing what's going on and understanding market dynamics, the way that they typically operate. And then beyond that, you can start to tie in what Toby was asking about with shorter term stuff, such as order flow, speed of the tape, relative volume, all these kind of things. And if you figure all that out within a full kind of holistic risk management plan, both on a trade by trade basis, a day by day basis, you're well on your way to being successful in the markets. So that is all the time we have today. Appreciate you guys stopping by and hanging out. Sorry we didn't get to all the questions. And have a great weekend. We'll see y'all next Friday. If you're not in our Slack room, if you want to hang out more, please join our Slack room. We run that at cost for $7 a month. In fact, we lose a little money on that. But we'd love to have you there. It's just, I was telling people today, man, this is why we're here, guys. I saw just a fantastic conversation a couple people were having. And I said, this is why we have the room for you guys to be accountable to each other, be open and honest with strengths and weaknesses. Just really good stuff. So keep it up, y'all that are already in the room, and we'll see y'all there. SMBFutures.com. See you.